I borrowed $100,000 from my cash value life insurance policy at 5%, loaned it to my LLC, taxes of partnership. I would probably collapse that, by the way. And then I did a bridge loan at 12%. Can I deduct the 5% as an investment expense? What say you, Jeff?
I agree. I would collapse that. So actually it's a loan to the LLC, not to you.
Yeah.
That's
how I would treat it.
Right.
I'd say you really, it's an investment expense if it's the partnerships.
Yeah, and I'm not sure if there's any advantage to generating income on one side and then having to find a place to deduct the 5%.
Yeah,
personally,
I would ignore this thing from a personal standpoint, and I would just treat it all as part of the partnership.
Yep.
And I would say really what it is that partnership has a expense ratio of 5%. So I would just have it grabbing the 7% as the income. I'd be deducting the 5%. So you don't need to do the three pieces. You don't need, because you really can't loan it to your own holding entity unless you have other partners. I mean, I guess if they have a third party, even then that would be weird. Really what you did is you have a contribution.
And maybe if they had one entity loan to another entity,
maybe
if the first entity was in the business of financing.
Yes, that's the big issue. You and me, it's hard for us to be a business lender. An entity, yes, it can. So the entity here definitely is. It's doing bridge loans. So it gets to take the 5%. That's the easiest path. Let's go the path of least resistance, is you'd write it off. You'd have zero, and it would just offset the income that it brings in by the 5%. So you're going to get to the same point of getting to write it off.
Right.